Have you ever wondered why the market sells off after big earnings results? We'll be talking about that and more throughout this video, including our technical analysis levels for the QQQ, S&P 500, Tesla, gold, Bitcoin, dollar index, and more. We saw some pretty large moves in the last session. The question is, will the Fed be scared of the CPI data? There's a lot to unpack here, guys, and it's going to be a good one. Stay tuned. Okay, well, let's begin the video for our market recap ending the 13th of July 2021, and CPI was the thing that really pushed the market during this day. Now, interestingly enough, when we take a look at what happened, CPI came out, initially shocked the market, it ran, and then by the end of the session, things weren't looking that good, including the banks that pulled back considerably after some pretty big earnings. Let's have a look here as well at Tesla, and you'll notice Microsoft and Apple up huge. Microsoft up on a trade deal, and AAPL, of course, announcing that they might be looking at some afterpay service. All sorts of things going on in the big tech stocks at this time. Now, let's have a look at these indices. What's going on? Nasdaq started super hot, went up to almost 1%. Look at that, 0.8%, and then everything fell off as concerns started to come through on what this CPI data means for, of course, the Fed, and more importantly, what they're going to be talking about, which is tapering, and whether they're going to take away the little bit of cushion that they've been giving the markets over the last year since the pandemic began. Which was the best sector for the day? Of course, it still was technology. Interestingly enough, healthcare and consumer staples were also up there. And I think this really shows us that the market's doing a little bit of cautious rotation as we approach our community trend lines and key technical levels where the bears could take control of the market again. So we mentioned JP Morgan, we mentioned the banks, and we mentioned how they had good earnings. And by all figures, it looked like they kicked ass. I mean, you look at these things and you think, how can the stock go down? Tom, it can't go down. It's not possible. This is what we call a buy the rumor, sell the fact kind of concept. And this happens a lot in earnings. Remember, the market is an optimistic tool. Most of the time, if you were to rank between 0 and 10, what the expectation being 5 being a hit, the market is already pricing in an 8 to a 10 in terms of optimism for what they expect. They expect not only do you hit the target, but you kick the target out of the ballpark. And that's the type of thing that does happen. We also mentioned that we saw CPI data, and there were a few interesting things here. We obviously saw a big increase in CPI on gasoline, fuel oil, commodities. All of these really led to some big gains here in the June quarter. And then we also had used cars and trucks. Is it time to sell your used car and truck? My goodness, 10.5 with a 2 rating on new vehicles as well. Wow, it's a pretty big CPI number. The question is, will the Fed be able to use this as, oh, hey, we think that the economy is looking great, everything's looking perfect, and we're ready, of course, now to talk about tapering, to talk about potentially pulling the rug a little bit on the market. And I think that's part of the reason why it sold off into the end of the day, but I also think it was more of an excuse ahead of what is no doubt going to be an uncertainty event, being Fed Chair Powell. You never know what he's going to say, and the market really does hate whatever he says, and then afterwards it tends to recover. So we'll be looking at the key levels that you need to be looking at in terms of purchases, in terms of key supports, key resistances as we go through this TA. So let's first start off here with dollar index, and of course it was a risk-off afternoon, and that led to huge bullish pressure here in the dollar index. If it closed up here for the end of the week, you know what? I would be saying the dollar index is absolutely back in town and it's ready to play. We had two big rejections. This is the 50 exponential moving average, this blue line here, and we are about to potentially, near the end of the week, if it holds this high, close at this level or higher. This is a big bullish side if it does happen. I always say the close is the key though, so I'm not going to make any real predictions until we see that closure, but that is still a very strong event. We almost had an all-time high. You'll see it sold off just at the top. Maybe now it pulls back an intraday trade back down to this 92.50, finds the 20 moving average on some time frame and finds buying pressure. Very strong move here out of the dollar index. Other things that we want to be watching right now to show us whether Wall Street is starting to move out of the growth and starting to put their money in safety ahead of maybe a market pullback after earnings or something could be TLT. This is the 20-year bond. So we've been watching this daily 20. We fully expected this to get hit yesterday. It certainly did. Bit of bounce off from that level. I'd be looking now for the TLT to find strength. This is the 20-year bonds. Go back up to the 148. And of course, if we breach the 148 and at the same time the market, the stock market that is hitting our critical resistances, we're going to be paying a ton of attention to that. And I would say that shows us that the bears are about to take control of the market. This is a very good chart right now to be watching. Other good charts to be watching, of course, the US 10-year. This is yield over the next 10 years expectation, and currently it's sitting at 1.4%. Now, you'd think that's pretty good for the banks. The banks should have been up. And traditionally, yes, the banks would have actually done well off this event, but this is just how high the expectation is into this earnings. And I think this is going to go through this earnings season. So if we've just seen the banks report well, let's think big brain here. We've also got the tech stocks all going, specifically the FANG, Apple, we've got Amazon, we've got, of course, Microsoft, Google. They're all going to be reporting soon. With the stocks moving into that and our knowledge of the fact that the market doesn't usually go in the middle of the 5, it usually goes into an 8 to a 10. Do we believe that if we hit an 8, will that be enough for the market even with the current price? Will the price have already packed in a 10 plus in terms of what they're expecting from the earnings? I tend to think so, but this earnings season will play it out and we'll have to be watching that day by day. What do I expect for the 10-year here? I do expect some resistance to be found. This effectively should push down, and that may in turn cause the Nasdaq to also turn around and go a little bit bullish. We've still got a little bit left, you'd think, on the Nasdaq, and we'll take a look at that soon. So let's go over to gold. Gold also finding some difficulty here to get through this 50 exponential moving average. It's trapped between the zones. I'd expect it to be relatively explosive if it does get through and close above. Remember, the close is the key, guys, on this one. Long leg doji yesterday, the low, the high. This means it's indecisive. It closed right in the middle. We're seeing bullish pressure coming through here early, even in spite of the dollar index finding strength. Gold's still doing well. And I'd be looking for a closure above the 50 exponential. So that's probably above like an 1815. And if that occurs, I think that's a decent participation level for an 1840, 1845 zone. There's some serious movement that can occur there once the market makes a decision. Remember, it's all about, TA is all about finding the key level. Once you've found the key level, then do we see participation enter in? And ideally, it's a fairly fast and sharp movement in the direction that we want. Another thing, Tesla. We've never seen a daily close above this 690 level. It rallied early, didn't quite finish the ascending on the 15-minute chart that we saw, and then pulled back, I think, pretty close to exactly the zone we expected. We, of course, were talking about the 671, 670. I haven't changed anything here. If we actually dial in a little bit to a 4-hour chart, you'll notice it's close to the 20, and of course on a 2-hour chart, it hit the 20 here, exponential moving average. This is the point where Tesla, after its huge move up, should be finding more bulls. And if I was to go in to the Fed day, with of course the Wednesday, and saying, where do I think Tesla's going to go? I would think it's more bullish than bearish at this level. This just makes sense. We've had a big rally, we've hit the peak, we've found the shorters, we've pushed back down, and if we get back up here again, I find it very hard to believe that 690 will be stopping it. So if we start rallying again, I think 690 should be smashed through, and then of course, hopefully we get above 700, and that will create a serious participation for Tesla. It's on the support. It makes sense for it to pull back here, and even if you put fibs and stuff on this, in fact, let me have a look. I haven't put a fib on it. Let's have a quick look here. See if it's come back to a nice fib zone. Yep, 38.2 fib right around it. So perfect fib level off the pullback. This is exactly where you want to see the chart start to fly high. Let's go over to the FANG. So do we need to panic yet about what we saw yesterday? Well, the FANG is leading the market. We're well aware of this. We also know that the pullback to the 20 moving average has been incredibly common throughout this rally that we've seen over the last couple of weeks. And we've got a new peak. So do we believe in the 20 exponential moving average? I guess we have to at this stage. And yeah, it looks relatively okay. I mean, the pullback at the end of the day, what can you expect? It rallied so hard. CPI data is unfortunately beating the forecast, and we know we need a slight miss or just a hit at the moment to stop the Fed from talking about tapering. And of course, ahead of a Fed meeting, it makes sense there is going to be some sell-off just in terms of fear into that event. I'm not too concerned at this stage, but yeah, the technicals all have to hold up, and at this point, we're looking at that 20 exponential. Let's have a look at the QQQ. So we know we're very close to the tippity top. This is our trend line. This is what we've been looking for us to get hit in terms of expectations. I mean, I think that it's kind of going to be one of those things where it rallies into, let's say, the tech earnings. We see the rally, we see the buy the rumor, and then we probably see a sell the fact. It kind of all makes sense. A little bit earlier sell-off than the September time that would predict. And yeah, it makes a ton of sense based on also what we saw with the banks yesterday. 4-hour 20 exponential was the one that we've been looking at for pullbacks. We have had a new peak. So of course, pullbacks to the 20 exponential should hopefully therefore be met by buying pressure. We may get there as fast as, who knows, the Fed day on Wednesday. If Papa Powell says the wrong thing, whenever he seems to open his mouth, things seem to go down, but then they quickly rebound after that as things become more clear. So at this stage, it's not a great buying market here for the QQQ. You see that daily and you think, that looks like the market has no idea where it wants to go. I mean, is that a shooting star? Is that a pin bar rejection? I mean, what is this? It doesn't look great, but it's still in the trend up. So we're approaching the tippity top, and I don't blame people just for chilling out and waiting to see more information here. Is it really worth you trading into this? You've got to make those decisions. Or is it better to wait for here and then look for the bear opportunity? I mean, this is the type of thing you make as a trader. I'm just showing you ways and things that we look at every day, but there are specific days that are better than others. And of course, sitting here near the tippity top is not necessarily the best time ever to be entering positions from a technical based perspective. Let's have a look at the Dow Jones now. So the Dow Jones almost is pulled back to the 20 exponential moving average on the 4-hour. We talked about this on the stream. Of course, this level here is where we expect some buying pressure to come back through, and it's kind of like meandering on down there in a almost flag-like fashion, getting down to this level. We expect buyers to be had here just because of the previous resistances, and I hope that does occur for people that are in these types of trades. Again, for the Dow, if you're new to the channel, we've got a monster trend line that's gone through here on the daily, and we'll be looking at that to show us true bear signs as well, for when we can predict, markets are really crashing. I mean, let's say we go down here, pull up, and then go through. We've got previous support, and a break of the trend line. It doesn't get much better than that as a signal that bears are back in control of the market. We'll certainly be paying attention to it. US 500, what's going on here, guys? Again, very similar to the others. We had our pullback to the 20 exponential. We now need to go down to smaller time frames. We go down to something like a 2-hour 20 or 2-hour 50. And the S&P kind of isn't really following a great moving average trend. You'll notice here it's all over the place. And I think that's a lot of rotation that's going on in the markets. You've got the banks going down yesterday, you got the tech going up and then down, and it's all convoluted in the S&P. All I'm looking at is that it's basically should have found some buying pressure around this level, and I'd like to see it rally in the session for Wednesday. That's the type of thing. We've got an engulf candle here on the 2-hour. At the end of the day, will we get any kind of rally? Look at the SPX. Again, 20 exponential here on the 2-hour, previous resistance. Notice how it's different. This is because this is the real market trade and it doesn't include the fake market futures. So around this area is where I hope buyers regain control. There's still a bit of movement here to get to the community trend line for the S&P 500, and we'll find out whether earnings can get it done. At this stage, still bullish and nothing really to be concerned about just yet. Let's have a look at Bitcoin. So what is Bitcoin doing? Well, nothing really. It sucks. If you look at Bitcoin, it's on a level of support, and you know what? It has to hold here. You can see that it's making a series of lower peaks. I want to see a rally bash that right now. Otherwise, you get underneath this level. Unfortunately for Bitcoin hodlers, I could see it going to 30,800 before it finds next level of support, which is previous buy zones. Bitcoin is tough. Ethereum obviously still looks sick. Most things look disgusting on these charts right now, and if you look at anything, you'd be saying bearish, 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 bearish. I'm still of the opinion that you've got to wait for the weekly closes, and as long as the weekly can rally, because remember, it's been down here before, as long as it can rally above this 50 exponential moving average, the blue line, then I think the buyers are still in control. But volume's really fallen off. And of course, really what I'm looking at here is always going to be, where are the whales? So let's refresh this now and have a look at where the whales have been trading up. They have been increasing their short positions. They usually don't like to lose, so that's something that we'll be looking at. And for a good turnaround to occur, you're going to need the whales to start lowering their short positions at the same time as price is increasing. If that's occurring, we're on a good track, but at this stage, it is not occurring. So we'll keep watching that. And in terms of news, of course, as we said, core CPI came out. We took a look at that result before. The expectation was 0.5. It was 0.9. That is not what you want to see. 0.4 and 0.9 for the core CPI. We want hits or slight misses. That's the weird, wacky world we're in with the Fed right now. We do not want the economy to recover too much, too fast. We want it to kind of, just do the right type of stuff. It has to be like the perfect recovery for the Fed to be happy, but not happy enough for them to take away, the wool in terms of the market. We want them to keep the printers on tap. Fed Chair Powell testifies 12 p.m. ET. This is New York time. This will be the big one for the session. And of course, all eyes will be on the Fed and on Powell himself. And as always, whenever he talks, scary things happen, but then hopefully it will recover after that. Good luck out there, everyone. Join us 1 hour before the market open today. That is 1 hour before the New York Open, 9:30 a.m. of course. So we'll be opening a stream at 8:30. And if you enjoyed the video, make sure to subscribe, hit that like button. And I want to thank each and every one of you for being incredibly loyal to the channel and following us. It's been amazing growth over the last 12 months. I just wanted to say a big thank you. I don't think I always say it. So appreciate you guys. Bye for now.